Good afternoon, everyone, and welcome to this edition of Market Fatafat. I'm Avan Dabash. With me is Poonawalla as well as Cheryl D'Souza. Lots lined up today on the show as we get you an insight as to what's buzzing in trade and which are some of the newsmakers. Well, it's a flat market at hand, given the fact that we've got an entire trading week after, I think, 3 straight weeks of truncated trading weeks. And for now, holding out around the 17,660 mark. You've got the Nifty as well, the Sensex as well, which is up just about 0.2%. The Nifty Bank Index is holding out. Just a quick check-in as to what IT is up to, given that that sector really bled in yesterday's trading session, dragged down primarily by Infosys, and for now managing to recover, albeit very marginally. Power Grid, Ultratech Cement, Titan, Bajaj Auto, along with Reliance Industries, Adani Enterprises and Tech Mahindra are some of the losers. Divi Labs and those IT names in the green, so HCL Technologies, Wipro, something like an Infi as well at 1260 seems to have stabilized. Kotak Bank, Asian Paints too, giving it company.
Absolutely. On that note, let's get started at all the stocks that are actually moving in trade on the back of news flows or technicals. On the technicals, today we have Kunal Bothra joining with us, while from the research team we have Ashesha as well as Ramakshi. A very good afternoon to all three of you all, and let me start then with the first stock as always, and this one is BHEL. Now this stock is in focus today, buzzing in trade because we have a note that is coming from Antique where they've upgraded the stock to a buy from a previous hold. They've hiked the target price to 110 rupees per share from previously 54 rupees per share. Now, this is the highest target that we're seeing that Antique has actually given for BHEL on the street. What they're expecting is they expect to witness a meaningful reversal in terms of the ordering cycle for the next 3 to 4 years. Even the Vande Bharat train set order will propel BHEL's presence in the railway segment. And in defense, also an emerging growth driver is what they expect BHEL to be. They expect an average annual order intake of 60,000 crores from FY24 to FY26 expected. And overall, as of now, the stock is trading at a distress of around 13 times FY25 expected PE and 8 times that of 26 earnings. So keep an eye out on that one. BHEL today is buzzing in trade. Post Antique has upgraded the stock to a buy.
Right. Let's move on and let's talk about Engineers India. And this particular count at one point in time was trading higher by about 4%. And this is on the back of sharp order wins in the year FY23. As you can see, the stock is trading higher by about 3%. The stock has hit a 1-month high as well in today's trading session. The company has secured orders worth about 4,500 crores in 2022-23, which is a 165% rise on a year-on-year basis. So on back of the sharp uptick coming in order wins for Engineers India, you can see the stock there is perched higher by about 3.3% as we speak.
All right, let's get a move on then and put the spotlight on BEML. It's in focus in trade today, and that's largely on the back of the fact that the company's land assets, that's BEML land assets, is going to list on the bourses come tomorrow. Now, do remember that the company is demerging their land assets business from the core business. It's a wholly owned subsidiary of the company, which will be excluded from the divestment process, that is the demerged entity. In fact, it has non-operational and surplus land of close to 1,500 acres on a freehold basis in total. And you have analysts as well who have gone ahead and looked at BEML Antique valuing the land asset at about 624 rupees per share before the demerger. On the 7th of September, the closing price was about 1826 basis that. The September 8th ex-demerger price was about 1464. The indicative value of the BEML land assets is at about 362. We'll be watching out for this come tomorrow.
That is BEML for you all. Let's move on and talk about a pharma name on the charts. And Kunal, you've picked out Divi's Lab for us. Last 1 month surely seems to be very interesting for Divi's Lab, and overall the pharma space had seen that run-up coming in as well. And Divi's Lab has finally actually participated a bit in this run-up. How much more upside? What's the target price that you're keeping for this one then?
Good morning, Vinny. Good morning, everyone. Good afternoon, everyone. So my sense is that on Divi's Lab, in fact, most of the pharma stocks are buzzing quite well today. The reason why I picked up Divi's Lab, one of the major reasons is because even last week I had planned off that the stock is on the verge of a breakout. We saw very strong upmove coming back in Divi's Lab, where in a matter of I think one trading session, the stock climbed up more than 250 to 300 points for itself. Now it's consolidating at the 3,250 odd mark, 200 odd mark. So I believe now at current levels, it could be a very good risk reward buy to enter into Divi's Lab at levels. levels. Looking at the way most of the pharma stocks are breaking out, my sense is that this could be a start of a very strong uptrend for most of the pharma counters. So Divi slab is what I would pick up at current levels, resting a buy from 3,200 levels. Near-term targets could be kept at 3,300 to 3,400 range and stop us at 3,150 mark.
All right, that is the take coming in on Divi's Laboratories with Shesha. Let's talk about earnings then. And Angel One, that's the one that's in focus on back of its earnings.
Well, absolutely. It is in focus on the back of its earnings. It is off the highest point of the day, but despite that, holding on with gains of nearly 2.5%. Numbers are good both on a quarter-on-quarter basis as well as on a YOY basis. Numbers look pretty good. Consolidated revenues from operations in the quarter gone by stood at 826 crores, an uptick of 10% on a sequential basis. Average daily turnover, meanwhile, has also seen an uptick of about 27% on a QOQ basis, while consolidated EBITDA stood at 371 crores, an uptick of 20% on a quarter-on-quarter basis. Margins have also ended this quarter to 57.7%. So on the back of good set of numbers, the stock is reacting positively. As I mentioned, it is holding on with gains of over 2.5%.
All right, watch out for Angel One in trade. But moving on, Vamakshi, let's discuss Fusion Micro and Spandana Spurti.
Well, absolutely, Avan. Both these counters are in focus on the back of a brokerage note that has come in from ICICI Securities. They've highlighted that the entire microfinance sector, the lenders are very close to an end of the longest asset quality cycle. Lenders have remained resilient, as is reflected in the 25% AUM CAGR that they've seen between FY17 to FY21. At the same time, the average cost has stayed elevated at around 2.5%. However, in the 9 months gone by, most players have shown a sharp improvement in their credit cost trajectory. In fact, they're expecting that the credit cost in FY24 could remain lower than average, which is a positive for these counters. Recently, Telangana High Court's judgment, they believe, would open up a fresh MFI lending in the states of Andhra Pradesh as well as Telangana at an accelerated pace. In fact, they're expecting both these states to combine offer a potential growth opportunity of nearly 60,000 crores. Overall, they believe the MFI sector is very well poised to deliver 20% plus of AUM growth and 3.5% plus of sector ROA by FY24. So within the sector, the top picks are Spandana Spurti and Fusion Microfinance. So on the back of this note, we have both these counters in focus. Fusion Microfinance is up nearly 3%, while Spandana is up nearly half a percent.
Okay, that is Fusion Micro as well as Spandana Spurti for you all. But Kunal, coming to you, and you, SBI, this has been on your list for a while now. Obviously, it's been there on your list, and you do like this stock. But in the last 6 months, when you look at it, nothing exciting sort of a move that we've seen for SBI. What are you looking at it in terms of the charts for SBI? Can we see a sharper run up now? What is this target for this one then?
So PSU banks as an overall pack are making a comeback. SBI, of course, is also one of the prominent names in that pack. And I think interestingly, the stock is coming back towards a breakout of the 550 mark, which I believe is a very key hurdle zone for SBI. So the sooner the stock takes out this major resistance, the quicker you may probably anticipate that the stock will get into a very strong uptrend from here on. So would be bullish on SBI broadly and for most of the PSU banking stocks, not just from a short-term trading play, but even from medium-term trading play. For SBI specifically, a breakout above the 550 mark could lead to a potential of up move of another at least 8 to 10%. So potential target of 600 is what I would eye on SBI on the confirmation for breakout above the 550.
Okay, let's move on and then talk about Jubilant FoodWorks. Now, why is this stock in focus? Yesterday, we have an announcement and reports were suggested in the morning that Coca-Cola India was acquiring minority stake. Now, in the evening, we had a release that came in from Jubilant FoodWorks where they said that Coca-Cola has acquired 15% stake in #loyalty. This is at a price of around 104 crore rupees. And #loyalty, why is it a highlight coming in? Because do not forget that in 2021, Jubilant FoodWorks had acquired 21% stake in 35% stake in #loyalty. Now, what is the change actually going to be on the back of this is that, because there will be some bit of a dilution that will be seen for Jubilant FoodWorks, and that will be, now their stake will be reduced from 35% to 29.75% post Coca-Cola has actually acquired stake here. So let's hashtag loyalty is the company that runs Thrive, and Coca-Cola has acquired 50% in Thrive. On the back of this, we've seen Jubilant FoodWorks is in focus, and obviously this will further lead to more of a increase in terms for Thrive, also in terms of business, because Coca-Cola is coming in with the cash book as well, the spending power is there as well. So on the back of this, we're keeping an eye out on Jubilant FoodWorks because they do have some stake in Thrive as well.
All right, and staying with that news then, the fact that this is a positive note coming in for Jubilant FoodWorks, it's not that positive for Varun Beverages. If you look at Varun Beverages, no doubt it is declining in trade today. Approximately 2% is the fall that this particular counter registered. Steepest intraday fall since in almost 2 weeks. There was a block deal in Varun Beverages, but the other flip side of that is also the fact that Coca-Cola was buying a minority stake in Thrive is potentially negative for Varun Beverages. Remember, as Coca-Cola is getting aggressive, this is in light with the Campa Cola launch by Reliance Industries. Also, this will get access to consumer data and drive more Coca-Cola products and give customized offerings. So it is potentially negative coming in for Varun Beverages as well. This is what a note from Nuwa said. So yes, Varun Beverages under pressure on back of the similar news why Jubilant FoodWorks is buzzing.
All right, let's move on then. And quick heel in the spotlight. There was a block deal that took place earlier this morning, and the stock clearly reacting to its quarterly performance that came out post-market hours yesterday under acute pressure. But it's not just the numbers that were disappointing. Just run you through the earnings first up. It was an EBITDA loss this time around of 16 crores versus an EBITDA profit last year of 34.9 crore rupees. The company delivered a loss as well on the overall bottom line basis at 6.4 crores versus last year's profit of 28 crore rupees. Consolidated revenue from operations has slumped 53% on year to come in at a meager 49 crores versus 103 crore rupees. Now, you also have Naveen Sharma, who's the CFO of the company that has resigned, though they have appointed Ankit Maheshwari as the CFO effective April 26. Stock from the get-go post those block deals, the earnings, all of the news is down and out in trade.
Let's move on. And Kunal, seems like you're stocking up on these pharma stocks and pharma names because you have Biocon on your list as well. How are the charts for this one? Similar to Divi's, or what should we be expecting here?
Well, it's come back after quite some time. Biocon has been one of the stocks which has been beaten down significantly, to say the least, over the last many months as well as many quarters. Now, the stock in the last 1 month has gone through a sharp correction. One was when it had managed to just about to go into a touch and go movement below the 200 levels, and from there the stock has gone to a good recovery, now at 225 to 30 plus mark. So I think looks attractive for more of a rounding bottom pattern for Biocon. The recent sell-off which had happened for the stock price could probably have indicated a major bottom is in place for the stock. So traders who are looking out for long-term play and who are looking out to accumulate pharma stocks, I think Biocon could be one of the candidates over there because the risk reward is extremely attractive for those who are entering at current levels.
All right, moving on then, let's talk about the realty pack today. That particular sector has been the top sectoral performer in trade. But before we move on to that, let's take a note of what the markets are doing right now. We are at the day's lowest point, 0.8% downtick coming in for the benchmark indices from the day's highest point. Nifty right now testing the 17,600 mark as well. But let's talk about the top sectoral performer in that. Kunal Bothra, why is this one in focus, Ashesha?
The company has shared some updates with respect to their fundraising plans, where yesterday the company went ahead and informed the exchanges that they have approved allotment of nearly 20,650 non-convertible debentures of the face value of 1 lakh each, aggregating to about 206 crore rupees. These debentures, non-convertible debentures, have been allocated or have been given on private placement basis to Marubeni Corporation, Japan, and the company has also said that these funds will be utilized towards general corporate purposes of the company. So some update coming in with respect to their fundraising plans, and that is the stock is in focus today.
All right, there you have it. That's Kunal Bothra for you. Let's shift gears then and discuss Tata Chemicals and a reduction in soda ash prices. Vamakshi is keeping the stock in the spotlight.
We're in fact seeing that the stock is languishing in trade. trade today. Now, brokerages such as Centrum Broking as well as Kotak have highlighted that Tata Chemicals has revised the soda ash prices downward by around 2 to 5%. This price revision is effective from 17th of this month itself on light soda ash prices. And in fact, if you remember, the last price revision came in back in November 2022. Now, Kotak believes that the price cut applies only to the India soda ash business, which contributes nearly 15 to 20% to the overall EBITDA of the company. Now, we did see that the China soda ash prices corrected by nearly 2% since mid-March, and this cut comes amid falling soda ash prices in the China market as well since mid-March. Centrum Broking believes that the price cut is likely back of demand softening as well as the pass-through of cost benefit to customers. So given all these factors, we have Tata Chemicals in focus. As I highlighted before, the stock is declining in trade today, trading near the day's lowest, 0.6% lower.
Absolutely, that is Tata Chemicals for you all. But moving on, and we have a note that is coming from Morgan Stanley, and this is on the affordable housing companies and affordable housing stocks. Now, let's talk about Aptus Value as well as for Home First Finance. Both of them were buzzing in trade this morning. What you're seeing is that they've actually said that for Avance Financiers, they've initiated coverage with an equal weight rating, given a target price of around 1,900 rupees, while for Aptus Value they've given and initiated a coverage with an overweight rating, target price of 325 rupees per share, and for Home First Finance they've initiated again an overweight rating, target price of 900 rupees per share. What they believe overall for the sector is that there is a secular growth opportunity in the systematically important sector. Housing finance is penetrated in India, so that could work out well for these housing finance companies. Unlike large housing finance companies, affordable housing finance companies have a pricing power as well. So they see value and they prefer Aptus as well as Home First, given the smaller balance sheet and higher loan growth potential for both these stocks as well. And that is why these stocks were trading with gains of almost 1% and more than 1% in trade as of now around those levels as well.
All right, let's shift focus and let's talk about SBI Card then. And this one is in focus because you have a Morgan Stanley note that's come out on SBI Card, where they are maintaining an overweight stance with a target of around 925 rupees per share. They are saying the industry spends growth moderated to 28% year-on-year in the month of March versus 38% year-on-year figure that they saw a growth in the month of February. They say SBI Card grew slower than the industry at 21%, but FY23 market share stood at 18.2%, and it has largely remained steady in H2. They are saying that SBI market share in cards is was down on a month-on-month basis, with 13% share in incremental cards in the month of March. But nevertheless, they are actually pinning hopes on SBI Card for a brighter future. So that's the reason why the stock is trading higher by about 8-10%. Target set by Morgan Stanley is 925 rupees per share.
All right, there you have it. Let's move right on then. Indorama Synthetics is the next stock at number 16. The company has said that the operations of their company has been partially affected, and that's largely due to a temporary stoppage of production that has been largely led due to a strike that's been announced by one of the contract labor unions. Though they have acknowledged that they are in continuous discussions with the concerned contract labor union in order to resolve the issue amicably, and that's going to be done as soon as possible. Clearly, you can see some impact playing out on the stock. It's exceedingly quiet, though, at about 44 rupees.
Okay, let's move on to the next one. And Poonawalla, why have you picked out this stock for us today?
The stock was up 3% yesterday. The stock is up another 2% today. It has gained nearly 5% in the last two trading sessions. Remember, some block deals took place yesterday, and we now have the details of buyers and sellers, where Sanjay Chamria sold about 83 lakh shares in the block deal that took place yesterday at about 290 rupees per share. Apart from this, Mayank Poddar also sold nearly 17 lakh shares at the same price. And we also have the details of buyers. Aditya Birla Sun Life Mutual Fund bought in the block deal. Apart from this, Plutus Wealth Management LLP also bought stake in the company. So on account of these block deals that have been taking place, the stock has been a bust for the last two trading sessions.
All right, so that's Poonawalla FinCorp for you. That is that's the news flow surrounding this particular counter. Crystal numbers are flashing on the bottom of your screen. For now, the revenue and the profits on a year-on-year basis have seen an uptick, but we have to see when compared to what the street estimates were, whether it met that or not. But the stock is under pressure, 1.7% downtick. But Kunal, coming to you, Poonawalla FinCorp, on the charts, how is this one looking to you? Do you think that the momentum that is picked up over the last few trading sessions will sustain?
Seems like the momentum is here to sustain the stock, which is also one of the recommendations which I suggested earlier, has looked quite attractive, for itself. Now, on the daily charts, one of the key patterns which the stock had formed, and which is why the near-term charts were looking very attractive, was an inverted head and shoulder pattern. The stock had broken out of this pattern about the 300 levels, and from there today, on an intraday basis, for example, we saw the stock moving up to 312 plus mark for itself before it's gone to a slight correction mode in sync with the overall market. So I would believe that the chart patterns are looking attractive. 300 seems to be in decline for this important pattern for Poonawalla FinCorp. And on the upside, I would look out for 320, 330 as a near-term target range for the stock.
All right, let's shift gears then and talk about the entire realty basket. What are the kind of trends that we're seeing and why are these stocks in focus, Vamakshi?
Well, Avan, it has been a stellar day for realty stocks. We're seeing that, in fact, the entire Nifty Realty Index is trading higher. In fact, the top sectoral gainer is Nifty Realty. And we did see that the companies, the real estate companies did come out with a very strong update as far as the fourth quarter as well as the financial year is concerned. And we were joined today by Gulam Zia of Knight Frank India as well as Bima Sharma of CBRE. Now, Gulam Zia says that the home loan interest rates being higher have not affected demand. They believe that the rate hikes have started plateauing and this in turn is giving comfort to developers. He believes the good days of real estate have arrived and top developers are in fact getting a good premium for their inventory. Mumbai and Delhi have seen good leasing activity as far as office spaces are concerned in the last quarter, and they're expecting the office market to continue to be stable despite the global headwinds that we're seeing. In fact, the for corporate spaces have also gone up. On the other hand, we also had Bimal Sharma of CBRE join us, and he said that the new launches are remaining steady and the market is seeming to be still in a positive territory. The current sustenance of demand definitely shows that there could be an improvement in pricing as well, and in fact the NCR region particularly has been a very strong investor market and they're seeing phenomenal sales in the NCR region. So given all these factors, all these realty counters are soaring away in trade today.
They are soaring away in trade. Let's just, talk about Varun Beverages again. There's an update that is coming. Cheryl did mark about the Nuvama report and how Coca-Cola increasing pace and becoming aggressive impacts Varun Beverages. We're seeing a 0.6% block deal change of hands that has happened. Stock is down almost 2% in trade as of now as well. We'll wait out for the names that are coming in. As you can see, the stock is trading at the days.
From morning, in fact, Vinny, there have been small block deals take place in Varun Beverages, and this one is a little larger sum of block deal that took place. That's 0.6% equity.
Absolutely. So on the back of that, continues to be in focus is Varun Beverages. But keeping it then with a bit on the realty space, and we have Kunal, you've picked out DLF for us on the charts. How is this one looking like in terms of the charts? What should we be expecting in terms of targets over here?
Again, attractive charts for DLF. In the morning, we were discussing about the real estate index and how the real estate index has been looking very attractive. It's fared up very well over the last 2 to 3 weeks. DLF is one of the top candidates in terms of the breakout and the way the stock has managed to lead the entire sector on the up move. I would expect at least another 10% up move for the entire real estate pack, and I think same would be the case with DLF. So near-term targets for traders who are looking to build up or hold on long positions could be closer to that 440 to 460 mark for DLF.
All right, watch out for DLF. That's a stock that Kunal has handpicked within real estate. And speaking of real estate, we spoke with Gulam Zia, Senior Executive Director at Knight Frank India, as well as Sharma, the Executive Director and Head Retail Advisory Transactions at CBRE, to understand the pricing trends a little bit more in real estate and what the outlook is. Listen in.
Every market is different and behaving differently. And depending on the product and the developer, the quality, the pedigree, the sales are moving. And likewise, the prices are moving up. The current sustenance of the demand shows that we will have continued improvement in the pricing as well, that the market will see.
The price rise, say, within NCR, say, Delhi, or within Mumbai would also vary from pockets to pockets. So gone are the days when you used to, see a price rise all across, very, very democratic, all through the real estate market of the country. It is not so anymore. So good developers, good products are in demand, and that's where the price rises would be very visible. And at the same time, there would be, below par kind of products and not well-known kind of a developer in the same market. Like even in Hyderabad, I can talk about a few such locations or developers where they're not able to take the prices up at all in last 2 to 3 years. In fact, some of the inventory which is lying unsold for a long time, age of the inventory as a concept also has to be taken into consideration. Apartments which have been sold for last 2-3 years, for example, are not finding any takers. So there, the discountings are also coming in. So overall, the price rise of about 6 to 7% that we see all over when I take the weighted average is a reality. The best of the products would perhaps be getting say 10 to 12% of a rise every year on year. Wherever the rents are going high, the sales will not go as high. Because why are you renting? Because you don't want to buy today. So the demand for rent shooting up is one thing that is emerging wherever the rental rates are going high.
All right, and that's what the experts had to say about the pricing trends in the real estate sector. But on that note, we slip into a break on this edition of Market Fatafat. But stay tuned, more on the other side. Don't go anywhere.